On today's episode, we are going to take a look at Trade Desk. This company has lost more than a quarter of its value in one day after reporting earnings. And earnings weren't even that bad. It's just been insane for growth stock investors. So in today's episode, what we're going to do, we're going to first take a look at the overall earnings, see what's happening behind the scenes. Second, I'm going to take a look at some other stocks that are being affected by Trade Desk right now and might be giving us some form of buying opportunity. The last thing I want to do is just share my overall thoughts. What if I was a shareholder right now? What would I do? How would I handle this situation? If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and stay tuned here on YouTube where I live stream taking a look at stocks you want me to look at. So let's get started. Alright, so today we are taking a look at Trade Desk. This is traded under the NASDAQ as ticker TTD. Right now it is down 26% for the day after reporting earnings. This is a crazy drop. From its 52-week high, the stock is down over 50%. Right, and this is insane. A market cap of $22.9 billion. So it's not like it's a small company. It's not like a company that's just doesn't have a product, right? This is a real business with strong revenue growth, with strong adjusted EBITDA. So how can things like this happen? Well, the first thing is they just reported earnings and it seems investors were just not excited. I mean, we had some great earnings last week and I guess they were expecting so much more from Trade Desk, but a 26% drop, I think this is insane. We can see revenue was about $220 million, and that was up from $160 million a year ago. That was a strong growth of over 37% compared to the same time last year. So we can see overall strong growth. And that also ended up beating consensus, which was around $217 million. The second thing is they gave guidance for the upcoming quarter, and the upcoming quarter they expect 259 to 262 million, and overall analysts expected about 251. Not only did they see strong revenue growth, they also expect high revenue growth than what analysts expected. And at the moment, I am not a Trade Desk shareholder, but I would be lying if I say these prices don't look super attractive. And we're going to take a quick look at valuations in a bit. But first, let's take a closer look at some recent news. All right, so the next news I want to take a look at is Trade Desk just announced a 10-for-1 stock split. 10-for-1 stock split, in my opinion, is not negative news. I can't see why this would be the reason the stock price is dropping. Trading will begin on stock split basis on June 17th of 2021. And they even share the reason that they're doing. They're confident in their future growth prospect, and our goal with this split is to make Trade Desk stock more accessible to our employees and a broader base of investors, right? Luckily, here we are in the United States where we get fractional shares, right? And fractional shares with zero fees are things I believe are the greatest assets for retail investors right now. And obviously maybe you and I, we can purchase some of these shares at a fraction, right? We don't have to buy the whole share. But right now, for maybe some other employees in other countries, maybe some other investors in other countries, it's gonna open up a whole new investment ability for them. So again, not a reason why I would believe the stock is decreasing. I mean, the stock, for their earnings, they reported some great news. Revenue was up 37% compared to the same time last year, where last year they grew about 33%. We could see a decrease in GAAP earnings per share. GAAP earnings per share are a bit lower, even though revenue was a lot higher. So that is definitely something investors might be kind of fearing. Most of this is coming from stock-based compensation. If we take a look at adjusted EBITDA though, adjusted EBITDA margins are a lot higher compared to the same time last year. Last year they were at 24%. Now they're sitting at 32%. They also gave some strong highlights for the business. First thing is customer retention still remains over 95% during the quarter, and it has for the previous seven years, not 7 quarters, 7 years. In quarter one, Trade Desk also has a partnership with Walmart to launch a new DSP based on the Trade Desk platform. So we can see they're not only keeping their customers, they're also partnering with some strong leaders right now to make sure that their advertisement asset is still super strong. Next, I wanted to take a quick look at this company's balance sheet. On March 31st of 2021, they had roughly, I want to say, a little bit less than $700 million in cash, but they have no debt to their name. So again, this is a company with a strong balance sheet, adjusted EBITDA profitable. They are having positive and net cash flow from operating activities. What is there not to like, right? This is a growth stock that has strong fundamentals. All right, so next I want to take a look at some stocks before I share like my overall thoughts on how I would handle Trade Desk if it was in my portfolio right now. But before we begin, let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. But first, we can take a look at apps. This is another software advertisement company. Some of these are dealing in the buying, others dealing in the selling. So a bit of different markets, but still in the overall advertisement market. Digital apps, Digital Turbine, which is NASDAQ apps, is currently 6.5% down, sitting at $60.81. From its 52-week high, the stock is down about 35%, and it has a market cap of $5.4 billion. We also have Magnite. They do report earnings later today, traded under the NASDAQ as ticker MGNI. For the year, Magnite is right there with Trade Desk, down almost 53% from its 52-week high, currently a market cap of $3.3 billion. And then we have PubMatic. PubMatic is traded under the NASDAQ as ticker PUBM, and again, from the 1-year 52-week high, the stock is down about 46.5%. And on the day, it is down 16.2%. Magnite is down 20%. So it's just been a crazy day for the overall advertisement market. Now I actually wanted to take a quick look at some valuations, and now that we see all 4. So first I want to take a look at forward price to sales ratio. Trade Desk seems to be the highest with a price to sales ratio of around 15. It might be a bit lower right now with the overall stock price decreasing throughout the day, but this is counting most of the big drop. Then we have apps at 10.7, then we have PubMatic at 8.3, and the cheapest in theory is apps based at 6.8. But next we have to understand why some of these are more expensive and some cheaper than other. First, we can see Trade Desk. If we take a look at gross profit margins, they seem to be the highest. Apps seems to be the lowest, right? So that makes sense why the price to sales ratio of Trade Desk is higher and the price to sales ratio of apps is lower. So I do believe right now these are all sitting at strong forward price to sales ratio. If I ever wanted to enter this market, I do believe now is a great time to enter with a little bit bigger than smaller position size, right? I personally never open up a big position at once. I usually open up either medium, small, or super small. Right now would be somewhere between a small and a medium sized position, just because of the crazy valuations that we're seeing. All right, so next I want to share my overall thoughts. So what would I do with Trade Desk right now if I had it in my portfolio? The first thing is I would rank out my portfolio and see how much of a weight it really is. Is it a big position in my portfolio? Is it a small position in my portfolio? Is it a medium-sized position? If I would say if it was a small to medium-sized position, after these earnings, they look super strong. The only main thing that has really changed has been the stock price itself. At this point, I would probably enter with a little bit more and continue to increase my exposure. If it was a huge big position already and I was kind of feeling a little bit uncertain of things, maybe now might be the time where I would just hold on and not really increase my position, because there's always risk. This stock can continue to go down. So if it's already a big position and I buy more and the stock continues to decline, that might not be something I am risk tolerable with, right? But if it was a smaller medium position, maybe I might feel a bit different. So I hope you guys enjoyed today's episode. Take care, guys. Have a good night and see you.